Something extraordinary is happening in the silver market right now, and if you're not paying attention, you're going to miss one of the most significant wealth transfer opportunities of this decade. I'm talking about a fundamental shift that's been building beneath the surface for months, and it's finally breaking into the open where everyone can see it. Let me show you exactly what I mean. 3 weeks ago, the silver-to-gold ratio hit 84 to 1. That means it took 84 ounces of silver to buy a single ounce of gold. Now, if you know anything about precious metals history, you know that number is absolutely screaming at us. The historical average sits around 60 to 1. During the 1980 silver spike, it collapsed to 17 to 1. Even in 2011, when silver hit nearly $50 an ounce, we saw it drop to 31 to 1. But here's where it gets interesting. That 84 to 1 ratio, it's already starting to compress. We're now sitting at 78 to 1, and the velocity of this move is accelerating. Silver is outperforming gold on a percentage basis for the first time in years, and the smart money knows exactly what this means. They're positioning themselves right now, while retail investors are still sleeping on this opportunity. You want to know who's paying attention? The industrial buyers, the solar panel manufacturers, the electric vehicle producers, the defense contractors. These aren't speculators hoping for a quick flip. These are companies that need physical silver to manufacture their products, and they're starting to panic because the supply situation is deteriorating faster than anyone predicted. Let me paint you a picture of what's happening on the ground level. I was talking to a contact who works with a major solar installation company last week. He told me they're now paying premiums of $4 to $5 per ounce over spot price just to secure silver delivery within 90 days. 6 months ago, those same premiums were under $2. That's not speculation driving those premiums higher. That's genuine supply shortage creating real-world consequences for businesses that need this metal to operate. And it's not just solar. The electric vehicle revolution that everyone's talking about? Each EV uses approximately 25 to 50 grams of silver in its electrical systems. Tesla alone is projecting to manufacture 20 million vehicles per year by 2030. Do the math on that. We're talking about hundreds of millions of ounces of silver demand just from one company's production goals. Now multiply that across every major automaker pivoting to electric, and you start to see the magnitude of what's coming. But here's what really keeps me up at night, and what should have every silver stacker paying very close attention. The COMEX silver inventories are draining at an alarming rate. We've seen over 110 million ounces leave the registered category in the past 18 months. That's physical metal that was available for delivery, now gone. Moved into private hands. Transferred to industrial users. Shipped overseas to satisfy demand in Asia and the Middle East. You know what happened the last time we saw inventory drains like this? 2011. Silver went from $18 to $49 in less than 4 months. Now, I'm not saying we're going to see that exact scenario play out again, but I am saying the setup is remarkably similar, except this time the fundamental demand picture is actually stronger because of these industrial applications that didn't exist back then. Let me tell you about something most people don't understand about the silver market. It's tiny, microscopically small compared to other investment markets. The entire above-ground investment silver supply is worth maybe $40 billion. That's it. For context, Apple's market cap is over $3 trillion. One company is worth 75 times the entire global investment silver market. What happens when even a small percentage of investment capital decides to flow into silver? The price goes parabolic because there simply isn't enough metal to satisfy that demand at current prices. We saw this play out in early 2021 when the Reddit silver squeeze movement started. Premiums on physical silver coins and bars exploded to $10 over spot. Dealers ran out of inventory. Mints couldn't keep up with demand. And that was just retail investors buying a few ounces here and there. Now imagine what happens when institutional money starts flowing in. When pension funds decide they need precious metals exposure. When sovereign wealth funds start diversifying out of dollars and into hard assets. The silver market simply cannot absorb that kind of buying pressure without massive price appreciation. And speaking of institutional money, let me show you something fascinating that's happening right now. The silver ETFs, particularly SLV and PSLV, have been seeing consistent inflows for the past 3 months. But here's the kicker. The premiums on PSLV, which holds physical silver in allocated storage, have been trading above net asset value. That means investors are willing to pay more than the silver is worth just to get exposure. That's not normal market behavior. That's desperation to get positioned before the real move begins. Central banks are playing a role in this shift too, though not in the way most people think. While they're accumulating gold at record levels, we saw over 1,000 tons of central bank gold purchases last year. That's actually bullish for silver. Why? Because as gold prices rise and that gold-to-silver ratio stays elevated, silver becomes the affordable alternative for investors who want precious metals exposure, but can't afford gold at $2,700 an ounce. There's also a geopolitical dimension to this that's absolutely critical to understand. The de-dollarization trend that's accelerating globally isn't just about countries dumping treasury bonds. It's about nations recognizing they need hard assets to back their currencies and protect their wealth. China has been stockpiling silver for years through private channels. Russia has been accumulating. India's silver imports hit record levels last year. These countries understand something that Western investors are just starting to wake up to. In a world where currency debasement is the official policy of every major central bank, hard assets with genuine industrial demand are going to preserve and grow wealth. Silver checks both boxes. It's money with a 5,000-year history, and it's an irreplaceable industrial commodity in the technologies that are supposed to define our future. Let me share something with you that might be relevant to your situation. If you're sitting on $100,000 or more in retirement accounts, there's a way to get physical precious metals into those accounts without triggering tax penalties. I put together a free guide on how gold IRAs work. It's in the description below. It covers the whole process, the rules, the benefits. Worth checking out if you're thinking about protecting your retirement savings with hard assets. Anyway, back to what's happening in the silver market right now, because this next part is crucial. The mining supply situation is actually getting worse, not better. Global silver mine production peaked in 2016 at about 900 million ounces. Since then, it's been declining. We're now producing around 830 million ounces per year from mining. Meanwhile, total demand, including industrial, investment, and jewelry, is running at about 1.1 billion ounces annually. You see the problem? We have a structural deficit of roughly 270 million ounces per year. That deficit is being filled by above-ground inventories, recycling, and government stockpile sales. But those sources are finite. Eventually, the market has to rebalance, and the only way that happens is through significantly higher prices that incentivize more recycling and bring marginal mining projects back online. But here's where it gets really interesting. Even if silver prices doubled from here, most of the new mining supply wouldn't come online for years. It takes 7 to 10 years to bring a new silver mine from discovery to production. The projects that could respond to higher prices in the near term are mostly silver as a byproduct operations from copper, lead, and zinc mines. And those mines aren't going to ramp up production just because silver prices are higher if their primary metal economics don't justify it. This creates what I call the silver supply trap. Demand is growing exponentially because of industrial applications. Supply is constrained and can't respond quickly to price signals. Inventories are draining, and investor interest is just starting to wake up to this opportunity. That's a recipe for a price explosion that could make the 2011 move look tame by comparison. Let me give you some specific numbers to chew on. The solar industry alone is projected to consume 185 million ounces of silver by 2027. That's up from about 130 million ounces in 2023. The electric vehicle sector is expected to grow from 60 million ounces to over 90 million ounces in the same time frame. 5G infrastructure build-out requires silver for its electrical components. Medical applications are expanding. Silver's antimicrobial properties are being utilized in more healthcare products every year. Add all of that industrial demand growth together, and we're looking at an additional 150 to 200 million ounces of annual demand by 2027. Where's that silver going to come from? Mine supply isn't growing. Recycling can only do so much. Government stockpiles are already depleted in most countries. The only source left is investor holdings, and those investors aren't going to part with their silver unless prices rise substantially. Now, I want to talk about something that happened in 1980 that most people have forgotten but is incredibly relevant to what we're seeing today. The Hunt brothers tried to corner the silver market. They accumulated over 100 million ounces of physical silver and silver futures contracts. The price went from $6 to $50 in a matter of months. Then the exchanges changed the rules, raised margin requirements, and the whole thing collapsed. But here's what's different today. The Hunt brothers were speculators trying to manipulate the market. What we're seeing now is genuine industrial demand growth, combined with investment demand, in a market that's fundamentally undersupplied. You can't change the rules to make solar panels need less silver. You can't regulate away the electrical requirements of electric vehicles. This demand is real, it's growing, and it's not going away. There's also a fascinating dynamic happening in the physical silver market that tells you everything you need to know about where this is headed. The premiums on physical silver products, coins, bars, rounds, have remained stubbornly high, even as paper silver prices have been relatively stable. American silver eagles are trading at $6 to $8 premiums over spot. Canadian maple leafs are $5 to $6 over spot. Generic rounds are $3 to $4 over spot. What does that tell you? It tells you there's a disconnect between the paper price and the physical price. It tells you that people who want to own actual silver are willing to pay significantly more than the spot price to get it. And it tells you that when the paper price finally catches up to the physical reality, we're going to see a repricing that shocks most investors. I've been watching the silver market for over 15 years, and I've never seen a setup quite like this. You've got industrial demand growing exponentially. You've got supply constraints that can't be solved quickly. You've got inventory drains at the COMEX. You've got premiums on physical metal staying elevated. You've got the gold-to-silver ratio at historically extreme levels. You've got central banks accumulating gold, which makes silver the affordable alternative. You've got geopolitical tensions driving demand for hard assets. Every single fundamental indicator is pointing in the same direction. Up. Significantly up. And the technical picture is starting to confirm what the fundamentals have been screaming for months. Silver just broke through resistance at $32 that it held for over a year. The next major resistance level is $35, and above that, there's not much standing in the way until we get back to that 2011 high of $49. But here's what I think most people are missing. This isn't just about silver going from $32 to $50. This is about silver potentially going to $100 or higher over the next few years as these industrial demand trends accelerate and the supply situation becomes critical. When you have a market this small, with demand growth this strong and supply this constrained, the price moves can be explosive. Let me tell you about a conversation I had with a mining executive last month. He runs a mid-tier silver mining company, and he told me something that really stuck with me. He said, "We're not investing in new silver projects right now because the current price doesn't justify the capital expenditure. But if silver goes to $50, we still won't invest because we'll assume it's a temporary spike like 2011. We'll only start investing in new supply when silver stays above $50 for at least 2 years." Think about what that means. The mining industry has been so burned by previous silver price spikes that collapsed that they're not going to respond to higher prices until they're absolutely convinced it's sustainable. That means the supply response is going to be delayed even longer than normal, which means the price is going to have to go even higher to eventually bring new supply online. This is the massive shift that silver stackers are witnessing right now. It's not just a price move. It's a fundamental restructuring of the silver market from a primarily investment-driven market to an industrial demand-driven market with investment demand layered on top. And that combination is incredibly bullish because industrial demand is sticky. It doesn't disappear when prices rise. Companies need the silver to manufacture their products, so they'll pay whatever they have to pay to get it. I want you to think about your own portfolio for a moment. How much of your wealth is in assets that are completely dependent on the financial system continuing to function exactly as it has? How much is in stocks that could get cut in half if we have another 2008-style crisis? How much is in bonds that are guaranteed to lose purchasing power as inflation continues? How much is in cash that's being debased by the trillions of dollars being printed? Now compare that to silver. It's a tangible asset you can hold in your hand. It has 5,000 years of history as money. It has genuine industrial demand that's growing exponentially. It's in a structural supply deficit. It's trading at historically cheap levels relative to gold, and it's positioned to benefit from every major macro trend happening in the world right now. De-dollarization, green energy transition, technological advancement, inflation, geopolitical instability. The smart money is already positioning. The industrial buyers are scrambling to secure supply. The COMEX inventories are draining. The premiums on physical metal are staying elevated. The technical breakout is happening, and retail investors are just starting to wake up to what's happening. This is your moment. This is the shift that happens maybe once or twice in a generation, where all the stars align in a market that's small enough for individual investors to actually profit from. You don't need millions of dollars to participate. You can start stacking silver with whatever you can afford. And as this trend continues to unfold, you're going to be very glad you did. The question isn't whether silver is going higher. The fundamentals make that almost inevitable. The question is whether you're going to position yourself before the crowd figures it out, or whether you're going to wait until silver is at $60 or $80 and wish you had acted when it was still in the 30s. This massive shift is happening right now. The silver stackers who understand what's coming are loading up while prices are still reasonable. The industrial buyers are panicking about supply. The investment community is starting to take notice, and the price is beginning to reflect the reality that this market is fundamentally broken at current levels. Don't miss this. The opportunity is right in front of you. The evidence is overwhelming. The shift is undeniable. And the potential rewards for those who act now could be life-changing. This is what we've been waiting for. This is the moment when silver finally gets the recognition it deserves as both money and an irreplaceable industrial commodity. And if you're not positioned, you're going to watch from the sidelines as one of the greatest wealth transfers of this decade unfolds without you.